Why is Sensex staying calm amid Middle East war? Will oil spike hit India? Can India stay insulated? Global stock markets dipped on Thursday while the US dollar rose, as investor anxiety grew over the possibility of America entering the Israel-Iran conflict. With President Donald Trump telling reporters, "I may do it. I may not do it," regarding a potential strike on Iran, traders moved funds into safe haven assets and fled riskier bets. The escalating Middle East tensions rattled global markets. But surprisingly, Indian stock markets aren't panicking. On June 12, a day before Israel struck Tehran, the Sensex closed at 81,691. Over the next 3 trading days, the index barely moved. It closed at 81,583 on Tuesday, a drop of just 0.13%. Despite the geopolitical heat, Indian investors are staying calm. Brent crude has jumped 11% from $67 to over $74 per barrel since the war began. Iran holds 12% of global oil reserves. But sanctions mean it supplies just 4% of the world's oil, mostly to China. Experts say Israel hasn't targeted Iran's oil infrastructure yet. OPEC has spare capacity, and India isn't reliant on Iranian oil.
As of now, OPEC is already sitting on higher capacity. We have also not seen any major attack by Israel on oil facilities in Iran. Concerns may rise on oil prices if Iranian oil installations are hit, and there is a supply issue to China, which may lead to a real spike in crude prices. Inflation in India is at a comfortable level, and that is providing comfort to the markets, despite some increase in oil prices over the last 5 days.
Meanwhile, India's wholesale inflation fell to a 14-month low in May, just 0.39%. Retail inflation, CPI, also dropped to a near 6-year low of 3.2%. The RBI has projected FY26 CPI inflation at 3.7%. India imports 85% of its oil. A 10% rise in crude raises WPI inflation by 0.9%. But with current levels stable and subsidies cushioned, the economy is holding up.
As of now, global oil supplies are not impacted as Iran supplies only 4% of the market and China is its only major customer. The 10% rise in crude prices seen so far is not on account of supply concerns, but due to psychological factors. Other countries may step in if the situation escalates.
Indian stock markets have remained relatively steady, defying the global panic and showing resilience amid the geopolitical uncertainty. For now, Indian markets remain insulated thanks to strong economic fundamentals and limited oil exposure. But the story could change if the war deepens. Stay tuned.